Now we go to using financial documents to inform decision making. Businesses will make better informed decisions if they have access to financial documents. Since financial documents contain quantitative information, when we talk about quantitative information, we're talking about information that are numerical, figures, values. They can be very helpful in decision-making process. For example, managers may need to up-to-date financial information to help run the business and make key decisions such as funding decisions. Access to relevant financial information
before funding decisions. Say it again about the first one.
Quantitative information.
Yeah, what is it?
Quantitative information are information that involves numerical figures, values, numbers.
Values.
Numbers.
Okay.
So, why do managers need informed decision making? They need to have access to financial documents. So that allows them to take decisions or to make decisions about one, funding. When we talk about funding, that's talking about putting money into the business. Do we have to put more money or not? These are funding decisions. And how can a manager decide that? A manager can only decide that if he or she has access to those financial documents. I read. Access to relevant financial information can help to predict when more money will be needed by a business. For example, details of current assets and current liabilities can be used to calculate liquidity ratios to see whether the business needs to raise short-term funding to boost working capital. Also, if the business is planning to expand, it can use the statement of financial position to see which type of funding might be most appropriate. So literally, managers need to make decisions about finance, funds, when they need funds, when they don't need funds. And this decision can only be made if they have access to the statement of financial position or the statement of comprehensive income. Is it clear?
No.
Funding decisions is about making money decisions. Finance decisions.
Okay, sure.
Finance decisions will be based on if we need finance now or not.
Like how?
For example, you'll be able to predict if the business will need money in the next few months or not.
Like cash flow.
Yes. So you'll be able to know if the business will need money in the next few months or not. If the business is going to need money in the next few months, are you with me, please?
Yeah, I'm with you.
If the business is going to need money in the next few months, you'll be able to plan ahead. In case there's no money that is coming through, then you should be able to know if you have to take a short-term or long-term finance loan. That is funding decision. Not only that, the business might want to expand. To expand, you need a lot of cash. Yes or no? The business you need access to your financial position to know if you have enough liquidity or not. Reducing cost. It is also important for businesses, for managers, to make decisions about cutting costs. And how are they going to be able to make decisions about cutting costs? They need to have access to information. A business might use the statement of comprehensive income to analyze costs. For example, by comparing the gross profit margin and the operating profit margin over a time period, a business can assess whether costs are under control or not. So managers need to make decisions about cutting costs. And to make decisions about cutting costs, they need the statement of comprehensive income, where costs are being incurred. So if you have to reduce costs, you have to reduce costs through the items.
Through the items.
Through the items in the statement of comprehensive income.
Make everything cheaper.
Whatever. Just ensuring that cost is reduced.
Yeah, sure.
That is still why managers might need to make decisions about cutting costs. And if they have to make decisions about cutting costs, they have to do it through the statement of comprehensive income.
It's the same with the funding, but
it's not. Opposite. For funding, you might need your statement of financial position.
Yeah.
For cost, you would need your statement of comprehensive income. It's not the same. Increasing profitability. It may be possible to use the accounts to help find ways of making more profit. So you would need your.
They make decisions about to increase
how to make more profits. This can be done through the statement of comprehensive income. To make more profit, maybe they need to increase the prices of their products, or they need to reduce. They need to find cheaper suppliers. Are you with me, please?
Yeah, I'm with you.
Investment decisions. Investment decisions are risky and uncertain because a business can never know for sure whether an investment project will generate returns in the future. So the future is very difficult to predict. However, information in financial documents might help managers to assess whether a business is strong enough to take risk.
I don't get it.
Yeah. Investment means putting money for the future, right?
Sure.
To predict about the future is not easy. Yes or no? But for managers, because it is risky to invest for the future, right? Are you here with me?
Yeah, I'm with you.
It is risky to put money into a business
Yeah.
on what you don't know. You cannot predict what you cannot, what it's 1/2. So, for managers, because they have access to information, financial documents, they can assess it to know if the business has the financial capability to take the risk. It's about taking risk.
Yeah.
So for you to take a risk as a business, the manager has to decide about that. So if we have enough money, then we can take the risk. Or we don't have enough money right now, we can't take this risk.
Yeah.
That is about investment decision. Is it clear?
So basically, if the business has the
Financial capability
financial
to invest for the future, they will. Through having access to financial information and being able to assess the information.
and they can make risks.
They can make decision about taking the risk or not. Government. Many government gather business and financial information. This is made available to the public. Some of the data is taken from accounts. The government uses the information to monitor the progress of the economy and help evaluate the success of its economic policies.
How?
Governments take charge of the country, yes or no?
Yes.
So what do government do? Government, they try to use financial information to know if the economy is doing well or not.
Through business.
Yes. If the
Really?
big businesses are doing well, it means the economy is doing well. And this will be as a result of government decisions, government policies. So government are in charge. Government take charge. We have legal control, yes or no?
Yeah, sure.
So if businesses are doing well, despite legal controls, it means government policies are making positive impacts in the economy. So government can use financial documents of businesses to measure the performance of the economy.
Sure.
Clear?
So they make. So if they know, if the government knows that the financial the economy is actually going up, they check the business.
Yes, because the business gives them the response.
Companies.
The business gives them the response. Clear? The competitors. Limited companies' accounts are available to the public. Therefore, competitors can analyze them to make comparisons. For competitors, why do I need your financial documents? I need it to compare mine, to see if I'm doing well than you. Clear? Is it clear, please?
Clear.
The media, they need to publish. They need to publish information to the public. That is what they sell. They sell news. Media sell news.
Yeah.
So, how do they get the news from? They get news from financial documents of businesses. Is it clear? Tax authorities.
Sure.
Tax authorities, they need financial information because they need to charge profit. They need to charge tax based on the profit made. And profit is part of your statement of comprehensive income. So for tax authorities, they cannot charge you the right tax without knowing or having information or being able to access your profits through the statement of comprehensive income.
Sure.
Do you get it or not?
I get it.
Are you sure? If not, let me explain again.
I get it. Yeah.
Okay.
I understand.
Auditors. Why do auditors need our financial documents? Auditors are those that check the accuracy of what we do. They check the accuracy of what we do, the records we give, the financial documents.
That's the business.
Auditors are people that check how accurate the financial information that we have given are. We prepare financial information, right?
Sure.
So auditors are those ones that check if they are right or wrong. If there's any fraudulent act in the course of preparing those financial documents.
Sure.
Is it clear?
Like these people are.
They audit.
The audit.
They check. They check the accuracy.
Like who actually are they? I know they check, but
Who are they?
Yeah.
They are
Like,
are external bodies.
External bodies.
They are not part of the company. The company calls them.
Oh.
The company invites them to check
Okay. Sure.
if the accountants, the financial information about the company is
It's
right
true.
or wrong.
Okay.
Is it clear?
Yeah, clear.
They are experts. They are specialists.
So they are
Example, KPMG.
they're experts of checking if the
Accuracy of the financial
how
documents
accurate it is.
of a business. Clear.
True.
Then the registrar of companies. The registrar of companies are those that allows you. They are the ones that makes you to be able to become, that they are the ones that allow you to become incorporated. Registrar of company, we talked about incorporation.
Is it from like the business?
From a partnership to become a limited liability company. For you to become a company, you have to go through the registrar of companies to provide them with your memorandum of association and the article of association. We talked about it.
Yeah.
So the registrar also, you have to submit your financial accounts to them every year.
Really?
To monitor if whatever you have given them in the MOA and AOA are still intact. You know, you give them your MOA and
You
AOA.
give it like every year.
They want to be sure that things are well done. You have given them your MOA and the AOA. That was the reason you were incorporated.
Sure.
You become a public or private limited company. So you have to provide them because the AOA and MOA is with them.
Yeah, sure.
So every year that passes by, whatever you do, they need to check based on what you have given them in terms of documents, if you are still in line or not. Is it clear?
Clear.
So that's about financial documents and its uses. Any question about it? Done.
No.